Good afternoon, traders. Nick Mastrandrea, Market Tea Leaves. Wanted to talk to you a bit about the, this is Wednesday, March 5th. Wanted to talk to you about the oil inventory report that came out earlier today. Currently right now, I'm looking at a chart of the crude contract for April, which is the front month, if you will, for crude. And I'm looking at around 1024. As we can see over here, this is definitely a downward bias because what you're seeing is some red dots over here. You're also seeing some of these blue hash marks over here, which basically means that it's pretty much trending to the downside at this particular point. And this is a 1015, 1018, etc. This is a 3-minute chart. Now if we take a look at, as we get closer to 1030 hits, and all of a sudden we see a huge downward spike on crude. All right. Now, another way you could tell this is take a look at the actual report itself. Now, on the actual report, at 10:30 a.m., crude oil inventories came up. Now, what happened? Last week we had like 0.01 million barrels. Okay, or 0.1 million barrels. The expectation this week was for 0.19 million barrels. It came in at 1.4 million. Okay, which means that there's more stock out there, if you will, than was expected. When you have that type of situation where there's more stock than is expected, and typically what you're going to see is a downward move on price itself, which is pretty much what happened in 1030. All right. Last week we had the exact reverse situation, whereby it came in unexpectedly low, which drove the prices higher. Now we have the reverse situation of that, which is to say that supply came in much higher than expected, which means there's more out in the market, and when there's more out in the market, the price will go down. And that's pretty much what we witnessed today. Another way that you could tell this, and again, this is in tandem with market correlation. Here we're taking a look at a vanilla chart of, again, the same contract, CL contract. Both of these charts, by the way, are Ninja Trader charts. And at 10:30 a.m., we saw this huge spike, going into the news itself, but then immediately thereafter, we started to see what was happening over here. By 10:40, it was very clear that we were going to see a downward bias, and actually we did. This is in the YM market itself. But again, the YM contract and CL are correlated. They're not reverse correlated. They are in tandem with each other. So if one goes down, it's pretty much safe to assume the other one will as well, or vice versa. In a situation like that, basically what you could do is you could place a sell at bid type of or sell at ask type of an order, if you will, if you're going short, and basically write it down to its lowest level. When you see that it's going to start to rebound, as it did over here, get out of the contract. But as you can see, this was a major move, and certainly a profitable one if it's trading in the right direction. Thanks. Hope this helps. Look forward to the next time with you.